Well, Colin Fyfe is the Chief Executive of Darlington Building Society. Colin, just to give this a bit of context, if we can, I mean, it seemed like for years we were talking about when the interest rate would go up and that it wasn't a question of if, but when. That was almost right up until Christmas just gone and just into the new year too. But in the background, and then particularly since Brexit, in the last few months, it has all been talking about that they're actually going to go down. So what happened?
It's been quite a change, as you say, and quite a comprehensive package announced today by the Governor. So we are in changing times. I think that the concern that the Bank of England had about the economy heading into recession has really led to quite this comprehensive stimulus, and that is really wide-ranging.
What will the Darlington Building Society's response be to the cut in rates?
Well, we will get our heads down to look at all the individual different impacts. For borrowers, borrowers are in a period of unprecedented interest rates, and therefore for individuals who have got the affordability, it is a great time to borrow. For savers, unfortunately, there is another outcome. But I guess I would say to the savers out there, it is still important to save. And one of the things that we will be doing is we'll be looking at certain segments of the market where we know that is important, such as individuals who want to get onto the housing ladder. It's important that we maintain strong interest rates to encourage them and perhaps young savers to get into that habit.
Well, you were hearing from Sam there, the Bank of England wanting savers to be confident. You're saying you're going to manage to find interest rates for savers. How and why should savers be confident when it's fallen after years of waiting for it to go up?
Well, I think savers should be confident that the Bank of England are standing behind the financial sector to make sure that they're strong and robust. I mean, the Financial Services Compensation Scheme gives a lot of confidence to consumers. What we will do is we'll look at our entire book, and we'll look at where is it possible to maintain higher rates for longer. But unfortunately, that isn't going to be across the entire savings book.
If you look at saving rates, though, they're already at rock bottom. I mean, if you look at an instant access account, the interest rate is 0.05%. If you look at another interest rate account, it's 0.55%. I mean, you may as well put your money under your bed, surely.
Well, there's many things you can do with your money, but a lot of them require quite a high degree of risk appetite. And I think your typical saver doesn't want to take that risk. They want to make sure that their money is secure, and that whatever the purpose is that they're saving for, their holiday, their car, their house, that capital is still there. And the Bank of England, their actions today mean that those savers will be protected.
Colin, it used to be a monthly event on 5 Live. You would wait every month to see how much the interest rates would go up or down at the start. It was always 12 o'clock. It was a big, programmes would be based around it. And now for 7 years, absolutely nothing. Are we going to go back into a period where this becomes a monthly event?
It's looking from the Governor's statement today as if we're all going to be looking in the next few months as to whether interest rates will have a further cut. That was pretty clear in the statement, that all elements of the stimulus package today have scope to be increased. So I certainly think for the short term, we're all going to be very conscious of that. Whether it gets to monthly, I would doubt, because there's only so many movements when rates are so low.
Quantitative easing and the amount that's been done, I mean, Sam, Colin, whichever you want to speak to this one, I mean, how is that going to affect the average person in the street? Does it affect us on a daily basis, Colin?
Well, what it does is it puts more money into the economy, and it helps to maintain lending. One of the fears and the risks at a time like this is that, as happened at the global financial crisis, that banks close up their lending books. The quantitative easing and the term funding scheme are all designed to try and stimulate that lending so that individuals and businesses should have the same level of access to borrowing as they would have in normalised times.
It's interesting you say that, because Dean in Leicester has just texted to say interest rate cuts / QE, a gift only for banks and big companies, not for public. Credit card rates 11 to 22%, overdrafts 4 to 9%, mortgages 3 to 6%. So, you know, it doesn't feel like we're going to get much benefit out of it, does it?
Well, I think the Governor also, in part of his speech today, he indicated his determination that banks will play their part in passing on any benefits that they receive. So I guess we've got to wait and see how he can deliver that.
Is there a worry, though, that with quantitative easing you devalue your currency more? And as we've seen, the pound has taken a battering over the last few weeks since we voted to leave the EU.
Oh, I think that has been a concern, and perhaps one of the most noteworthy changes since the Brexit vote. And whilst a low currency, there are winners and losers, I think some of the stimulus today is designed to bring the currency up to a more acceptable level.
That is Colin Fyfe, Chief Executive of the Darlington Building Society.